Good morning. How are you, Joe?
Doing good. How are you rocking today?
Doing well. Doing well. Wanted to address something because kind of got some blowback last week that investor BlackRock isn't pulling out of the market from several people. And there were some additional information this week that came out that shows that, yes, they are. So that's one of the things I wanted to address today, as well as go through what's happened in the rate market as well. So welcome, everybody. This is the Orlando Real Estate Buzz, and we come to you every Thursday morning now at 10 o'clock because we have to get our kids to school.
Yep.
So we go through the numbers every week and different things that are affecting the real estate market. So to start off, we had mentioned last week, Joe, that one of the biggest investors in real estate, BlackRock, who owns Home Partners, was going to be pulling out of roughly 38 markets.
And we got blowback on this. This is an interesting one, right? Like, when have we ever steered anybody wrong with the information?
I know. Yeah, people are like, no, BlackRock's too big. They're buying everything. It's like, well, no, actually, they're not. Mm-hmm. And if we go back and we look at the articles that came out last week, this one, in particular, owned landlord to cease buying in 38 cities. And it's true. I can tell you it's true because yesterday I've used the program, the Home Partners program. We got this from Home Partners. They are reaching out to let us know that they will be pulling out of the Deltona metropolitan area, which was a great place for them to do to use this program. Actually, I think it did 2 homes up there with this program. So after September 30th, they will no longer be buying any homes in Deltona, Florida.
Yeah. So maybe that's where we semantics wise we messed up. When we say they're pulling out of markets, it doesn't mean that they stop that very, very, very second.
Right.
It means that they're pulling out, which means they may continue to close the couple files that they have in process, or they're going to reanalyze, but they're not going to take new applications, effectively meaning that they're pulling out of those marketplaces. I know I'm kind of hitting these points because it sounds like we did get a little bit of a challenge of where people felt like we were given bad information, but we're pulling this information directly from the articles and publications and releases that everybody has access to. We're just reading into them and figuring out what's discernible and what's important and how does this market and why is this important. So I'm
actually got a client who's approved right now who's looking in the Deltona area.
Yeah.
And I've actually reached out to her last night and going to try and reach out to her again today because it's like, hey, if we don't find something before September 30th, you're out, and we're going to end up having to find another program. But they've made it, what they did over the past 3 or 4 months, though, is they also changed their guidelines so that she had to have a 620, which she did. I think she had a 630. But they would no longer buy houses that had septic.
Interesting.
Which, when you're in the Deltona, DeBerry, Orange City, the land area, there's not a lot of those homes, because of the age of them, are all on septic. So it took out a good portion of the market we could choose for her. So now we're scrambling, trying to find something in her price range that we can find that will meet all of Home Partners guidelines now. So just want to do a clarification on that yes, they are pulling back. They are staying in a couple markets. Talked to a friend in Atlanta. She talked to her rep up there. They will be staying in, for instance, Atlanta. Within the metro Orlando area itself, we have not received any notification either that they will be pulling out of the Orlando area.
Yeah. But like seeing this kind of update right here with like Deltona, right? Like what it looks like they might be doing in this semblance is they're pulling out of those emerging markets that saw the highest appreciation levels and the highest popularity, right? So like you take the Orlando grew, but then you saw Deltona really grew at a little bit faster rate because it's the outskirts, it was lower price points. It took advantage of being lower price points. The appreciation when market settles, those metros are not as desirable as the primary metro, right? Like
Correct.
and I say this in a very general term, like, you have the Orlando metro and then Deltona's just outside of that. It's kind of when the market cools as a whole, those secondary metros kind of see a little bit bigger decline potentially than your primary metros.
Yeah, I mean, if you go back to our crash, 2007, 2008, Deltona actually had one of the highest foreclosure rates in the country. They had numerous homes, unfortunately, go into foreclosure during that period of time. And if you're an analyst, you're probably looking historically at, this place, the last turn down we had, pullback we had, really took a beating, and didn't hold its value as well. And I think you're exactly right. Looking at Orlando, it's like Orlando Metro holds its value a lot better than some of these outskirt areas do.
Yep.
So just wanted to clarify that. And then this week, I think the other news is that August saw quite an increase in interest rates after pulling back at the beginning of the month.
Yeah.
When you look at this chart from Mortgage News Daily, which I love this site, you see that the 30-year beginning of August we had pulled back to about 5%, which seemed to help some of the buyers get back into the market.
Yeah.
And then as of yesterday, we're back up to roughly 6%. So we've seen roughly a point increase in interest rates over the past 30 days.
Yep. Yeah, it's definitely, and you look at the month, like the last day of August was where the rates were the highest, right? Like we literally climbed the entire month for the most part, and that's the hard part is, you look across that board, like, when we got back into the low fives, that really helped get buyers back into this market or able to, the affordability was, but now we're back at 6. And this morning we're right about 10. So markets are just now starting to open. A lot of investors are just now starting to open rates up, probably around 11. And I'm curious to see kind of where we go. I think right now we're not, I think that we're not going to see, I don't expect it to be a positive day. But I don't think hopefully we're not going to see another big move. It might be a smaller shift. We saw a small move yesterday, but at the start of the week, we saw a much bigger move.
And I'm trying to think of any real big economic numbers that have come out that kind of push us up this way. And August is usually a pretty quiet month. And I don't remember anything really crazy outstanding. I mean, our employment rate has stayed fairly consistent. Yes, inflation is still sitting rather high, which of course can affect the bond market. But there was nothing like super crazy that I could think of that was pushing it up like this.
Yeah, I think you're right. Like, we saw some of the bonds didn't see as much of aggressiveness, or the bond auctions weren't as strong as they had hoped them to be. Numbers were there. I think a lot of this was movement on the reports of builder confidence, on, new build, cancellation on builder contracts, a lot of that. And then also kind of with where the feds and all these different, the what they're saying about rates and where they think they go. I think a lot of it's just what they're saying is having a bigger impact right now than what the data is saying. That
yeah. It's interesting because I saw this yesterday and I'm like, and this is Gallup, one of Gallup's polls on economic confidence.
Mm-hmm.
And you see that we had dropped, I mean, tremendously earlier midsummer, but people are starting to get back a little more confidence, which some of that may be one, seeing the interest rates drop back a little bit, beginning of the month. Gas prices pulling back some as well.
Mm-hmm.
So, and maybe it's just, summer people not feeling, quite the stress, because people are out vacationing a little bit more, maybe not paying as much attention to stuff, getting things done before school kicks into session, things like that. So people are feeling a little bit more confident, which is always nice to see. And I think that translated a little bit into the numbers that we'll see this week, as far as number of closings that happened in the Orlando area. But you kind of felt like things had settled out.
Yeah.
You know what I mean?
Yeah.
I had more buyers feel like they were ready to go out because they felt, hey, the rates had settled off, at that 5%, 5.25%. And, we had talked to them about, hey, requesting some closing costs to help them buy down the rates to make it even more affordable for them. So, but that's kind of where the market is. We'll see how it goes going into the fall. Yeah. Because now that people are, for us, people are back in school. So you tend to lose a number of the families unless they're kind of transferring here. Or for some reason they've got to move. So we're going to lose a few of our buyers that we normally might have, during the summer months.
Yeah. And, like what I'm really interested today, like you had, Europe, a lot of European countries released their inflation numbers today. We saw them hit, some of the high, some big highs,
Yeah.
The Eurozone hit a record high for their inflation. And, what's interesting is because inflation is growing and we're starting to see that world economy type mentality, when stuff happens elsewhere, it impacts us. So how does it impact? But what really caught my eye is a growing interest or a growing consideration for the European Central Bank to increase their interest rates. Right now,
they pulled back a little bit and started doing some easing again.
Yeah, well, they're in negative territory, so they're not even at they're not even in positive, and they're talking about. They increased their interest rates to 0 and to July, so they were right, and that was the first rate hike. But they're talking about doing a similar or even a larger one September 8th. So I'm curious to see. So I think they did 50 bips back in July.
Yeah.
So if they do 50 or 75 bips, like that's going to be really interesting to see. What does that do and how does that impact us?
Yeah. And I think the scariest part for Europe, quite honestly, is their energy situation. A lot of headlines about them going into the winter, and with the conflict going on in Ukraine and the disputes with Russia, is where are they going to get their energy?
Yeah.
Where are they going to get their energy? The other interesting thing I saw this week, which I thought was rather interesting, Egypt is doing a bond offer on the Chinese yuan, on their digital yuan. So that's kind of interesting because the U.S. Treasuries are the big one, and you haven't seen an outside country do bond offerings on another country's bond. And it's like, I got to look into that one a little bit more.
Yeah,
but that's interesting. They're actually doing a bond offer on the Chinese yuan. We'll see where that goes. Because China would love to take over the world's reserve currency from the US dollar.
I mean, that's definitely very interesting. And a lot of, like a lot of like we talked, and I don't know, I think we've in prior episodes talked about this, but a lot of the strength of the American dollar is because, oil sales like worldwide are done based off the American dollar.
Yep.
Right. So what happens when that changes? And this is something that China's been trying to make a push for a long time.
Yeah.
And this is that's a little interesting to see that, okay, well, we have a Middle Eastern, country. I know Egypt is in Africa, but like they're right in that, that they're taking that little bit of that adjustment. And I know that Egypt typically issued their bonds were based off of US dollars in the past.
Dollars, yeah.
So I'm curious to see what that tails and what that looks like in the coming months.
And also the president of China, only his second trip outside of China since COVID hit was to Saudi Arabia.
Mm-hmm.
Saudi Arabia is talking to them about joining the BRICS nations, which that's where China, Russia, South Africa, and others are trying to form their own currency. So that's probably the biggest scare to the U.S. economy are these BRICS nations. Yeah, I believe they've got something like 70% of the world's population.
Yeah. So and BRICS is Brazil, Russia, India, China, South Africa.
South Africa. Yep.
So definitely, heavy hitters on population. You're talking China, China, India, like big hitters on it.
Big hitters.
And the reality is like, if you look at that, it's like, all right, China, India, Russia, Brazil, South Africa. These are major countries across the entire globe, not just regional. A lot of times you see these things hit like, we take like Euro and stuff like that's regional to this specific area. This is really growing out in kind of a world, countries across the entire globe that are partnering into this, that have built this, that are working to continue to grow this. So that's going to have some implications in the long-term financial picture, but in the immediate, probably not much.
Yep. So that's where the market is today. Those are things we're seeing influence. So then we've got our new numbers that came out for this past week, and we actually saw an uptick in the number of sales to 500,
which 10% was nice. Uptick.
We had dropped down to that 450, 460, 470 mark for a couple different weeks there, and our inventory increased, or actually decreased for the first time by 27. So we're seeing the leveling off of the inventory. And if we get into our numbers here, let me blow this up a little bit. We're seeing again, the consistency that we've got room to move, and we're really more into a much more normal market.
Yeah.
So you're seeing the original to final list price, on average fell about $11,000. And the original list to sales price, 21,000. So percentage wise, you're seeing, anywhere from a 3%, 4%, 2% right across the board, for each of the different levels that they measure, off of the original list price.
Yeah.
So our market's settling out. We've got room to move. There's bargaining in there, which is always nice to have.
Yeah.
And then when we look at our sales price, interesting, our peak was back July 3rd for the average sales price. And we're up to roughly about 560, and our average sales price now is dropping down to about 485, roughly that area. And then our median actually creeped up a little bit over the past couple of weeks. $1,000 here or there, but nothing substantial. So, our market, Orlando's very consistent. Be glad we're not in San Diego or any place out west.
Yeah.
San Diego's sales have dropped off 48%.
Wow. That's massive.
That's
It's a massive
huge.
decline.
And their sales prices, they're up to close to like 60% of their MLS listings with price reductions now. So we really, the more you look at, I actually saw an article, I think yesterday, that said Florida was ranked #1 for economic security or something like that in the United States. The best place for entrepreneurs, start businesses, things like that. So I think our economy here has been extremely resilient to both the inflation and the lockdowns and different things.
Yep.
And it's really helped keep us more of a straight and steady path where, you've got other parts of the country that are just totally up and down.
Yeah, a lot of movement across the country.
Excuse me.
And it's definitely, it's definitely interesting. We talked a lot about this, how, though we may not all agree with, the governor in place or this and that, but what they did do and what the state did and how they handle COVID and how they're handling things, and the attractiveness of no, state tax, state income tax and stuff like that. These are all things that are driving people to Florida right now. That tourism, all those things have always been there, but I think a lot of people from an affordability stance in some of these areas that were a lot more expensive are looking and considering Florida more and more because it is more affordable, but it is getting pricier, a lot pricier.
Oh, yeah, it's pricier.
Like it's not the same Florida, that it was 5 years ago.
Yeah, still the most difficult thing is for renters. The price of rentals is still, even with all the building going on, it just, there's still not enough rentals to handle the influx.
Yep.
We're probably going to have that problem at least for another year and a half while you see a lot of these projects that you're driving by, get finished up.
Yeah.
So weekly sales, we actually picked up after, 3 weeks of, being around the 470, 450, 451, jumped up last week to 500 sales, which might quite honestly be part of that seeing the rates drop back down into that 5% range.
Yeah. I mean, you look at it, rates dropped, back into, end of June, started, and in July. What's it going to be now that we see the rates climb back up? Like, I'm curious to see that average. Is the numbers going to go back down, when we're sitting here having this conversation next month?
Yep. Now, this was the one I found interesting this week. Foreclosure sales. We took a jump up to seven foreclosure sales. We knew you knew this was going to start hitting at some point because, the moratorium's all gone. The process we knew was going to take a little bit to really get through the foreclosure process. But I was actually expecting this to start shooting up a little bit more than we have.
Yeah. I mean, seven homes is a small number, but the part that I do want to point out is in all of this appreciation that we've had in the last, the last 2 years, how a home is going to foreclosure is beyond me.
Yeah, I know.
Nobody should be it's very, very tough. Our levels are above where they were, during the last, we're at the highest that they've ever been. Values are at the highest. And it's like, I just don't even know what to say on this one. It shouldn't get to this point in this market.
No, it
shouldn't. Appreciation we had,
because you just, like you said, there's so much equity. Don't be stubborn. If you can, yes, you may lose your house, but if you're walking away with $150,000 in your pocket, at least you've got a point where you can start over again.
Yep.
And because you're seeing, the numbers we're seeing is more people late on their car payments, more people late on their electrical bills, So it's never be afraid to reach out because there's probably a solution out there that we can help people come up with.
Yep.
and try and make it the best we can economically. Maybe you do have to go back and, rent for a year or two while you're getting your credit reestablished.
Mm-hmm.
At least you've got money in your pocket.
Yeah.
And you're feeling a little more secure.
Mm-hmm.
Then our average days on market staying very consistent, that 28 days, 27 days. Again, we've leveled off to a more consistent market. And then this is going to be the interesting thing, and this should help sellers and help hold prices where they are currently.
Yeah.
Because we're leveling off on that inventory. After having no inventory, we've got a good inventory right now. We're up 157% since January, which is excellent. And, leveling it off, if the number of sales level off, it gives us a consistency. But it's not exploding to where there's so many on the market that we're just going to see prices, drop like a rock. And I think that's important for a lot of people to look at. And this is where you really got to get into your neighborhoods specifically. Because I was doing a CMA for a client in Deltona, and within his unit, everything's a unit out in Deltona. Unit 71, they had gained 10 listings in the past month, and not one of them has gone under contract.
Yeah.
And that's where a lot of people look at last month's numbers, but you got to look at like the window right now. Is last month they had 4 sell, and they started with seven new listings. They had 4 sell, and then this month they've got 10. So there's a lot of choice with none of them selling as of yet. None of them going under contract. Yet. So you've got to look at that when you're pricing things too. Okay, all right, we got to go look at the others, make sure we're attractive, make sure we're doing a real apples to apples as far as value for people. And then in our condo market, this was kind of fun because somebody sold another really big condo. Because look at this. We were dropping like a rock in our medium price, and we went through the roof. So somebody sold another really big condo downtown. Congratulations. So, but we're still in the consistency with the condos as far as volume. We're averaging right at that 170 mark. Right? So the condo housing market really kind of settled off, very consistent. I wouldn't call it negative. I wouldn't call it positive. I'd call it neutral. Yeah. Just a neutral market right now. So that's where we're at.
Yeah. I think it's a pretty, it was good to see those home sales, kind of tick up, but I do think it's related to the drop in the rates. I think we're going to see how rates are playing a big part in buying right now.
Yeah.
There's times when rates don't move much and people aren't as, like you said, as sensitive. That's a good word for that. But right now, everybody's hypersensitive, and it's because a 0.5%, 0.75% difference, that could be that's a lot of money.
Yeah. Unfortunately, incomes aren't growing at the same pace.
Yeah.
And that's the difficult part is people have got to set income. They're given guidelines. Hey, we got to keep it, based on this rate, your budget is $400,000. So this is where we got to be. And then all of a sudden you lose a 0.5%, and you've got to go to your client. Okay, we got to pull back from 400 to 375,000 for you. And that's disappointing. You always want to hear it the other way. Hey, rates dropped, 0.5 point. We can probably stretch it now to 4.25. No one likes to hear it. No one likes that pullback. Hey, we're going to have to pull back. We may have to have you pay off this credit card, to make the DTIs work.
Yep.
We've had those discussions numerous times with people.
It's
staying up on top of the market is is what it is, and
Yeah.
not being afraid to have those discussions, and not being,
Yeah.
you know, having the relationship with clients where they're not afraid to ask, hey, what do you think? Where do you see? Hey, I saw this in the news. What does it mean? So,
So one
all
thing that
right.
I thought was really, really interesting before we end is I saw that Bank of America is piloting a new program. Did you hear about this?
No. Oh, I love these.
So it is a new program that is very interesting. It's only being piloted in a couple cities right now, but it's a banked community affordable loan solution program. So it's not something that we offer. It's something that Bank of America has, and it's I'm really curious to see because it's geared toward only the Black and Hispanic communities right now.
Okay.
So it's not minorities across the board. It's only those two communities can qualify for it. And it's zero down, no mortgage insurance, no credit score requirement. So it's going to be really interesting to see what that program looks like and see.
Didn't we have some of those before, the like no credit score, kind of no down payments? Didn't we kind of have those before?
we had some stuff like this before, and I'm very curious to see what it looks like because they haven't really released much info on it. But it says that they're qualifying these borrowers based off of their rent payment history, their utility payment history, and so forth. So I'm very curious. They haven't laid out what the terms of it, and is it actually something that's going to be great for the minority community to help improve home ownership? And that's what it's geared or marketed as, or is there something else to it? Because my concern is that maybe this isn't a program that's as hot to trot that, it sounds great, but the reality is not, because we've seen stuff like this back, but we saw these things creep in a few decades ago, know?
Yeah.
So the concern is when they do stuff like that, these borrowers have no equity and in the property to begin with, so they're kind of stuck in a rock and a hard place in that point because they didn't put any investment into it, and they're just doing 100% LTV. So I'm really curious to see what this is going to look like and how that pilot program is going. But it's something that is starting to pop up. I think the closest metro that's offering it is Miami, and it's only like 5 cities in the whole U.S. that they're piloting it.
You got.
Well, it's not. I don't know.
How much house can they qualify for?
They haven't shared any of those. Any of those details haven't been shared.
We got to keep an eye on that one. That's one we got to keep an eye on.
That's going to be something that I'm curious to kind of see how it plays out and what it looks like. And is it something good for the marketplace, or is it really just smoke and mirrors?
Yeah.
I lean towards smoke and mirrors and publicity.
So do I.
And/or a major profit driver at certain points because they're going to take it as hey, this is a loss leader. But the reality is, are they doing these at like 7.5% interest rates, and then getting government insurance to back it on the back end? Mm-hmm. So usually there's a lot more behind the scenes that makes it much better for the bank than the consumer.
Yeah, seen those before.
So well, that's all I've got. Thanks so much, Brenden.
Thank you for your time. Appreciate it. Have a great one, everyone.
You too.
Bye-bye.